Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, thanks for coming on today.
Good afternoon.
Good afternoon. So let's start with the U.S. economy. The latest beige book report from the Federal Reserve shows that growth has slowed in the past couple of months to a moderate rate. Well, it says the economy is held back by supply chain issues and the shortage of workers, but on the whole, the outlook is still positive. Tell us about the beige book and what you take away from it.
Right. The beige book indicates that the U.S. economic growth rate slowed down, but to a moderate rate, even though there have been quite a big issues such as supply chain disruption, elevated prices, and shortage of workers, and there's been continuation of fears about the Delta variant of COVID-19. But overall, as I said, the rate itself is reasonably okay. Many businesses have said that they are expecting higher prices and supply shortages compared to the last year. But nevertheless, if we look at the consumer spending side, it seems to be quite strong. Most of the countries have showed quite reasonable consumer spending growth, and manufacturing activity also increased. And as for the residential real estate side, it's fairly flat. I guess a lot of issues related to the car sales due to the shortage of the computer chips is kind of putting down some issues for the overall market. But nevertheless, if we look at the wage increases and consumption growth rate, it seems to be fairly reasonable. So going into the future, we think that we're not going to be probably entering a stagflation era, more like reasonable growth rate with a reasonable inflation. So Goldilocks, but slightly better than the previous cycle of the Goldilocks era, which was from 2011 to 2019. We think that the growth rate should be a little bit higher, and on top of that, inflation will be a little bit higher, but it's not going to be where stages of stagflation, where growth rate is slowing down rapidly while the inflation skyrockets. We think that the overall economic numbers seems to be quite reasonable.
Right, so that was for the beige book. And now to the markets. The S&P 500 hit an all-time high on Thursday, gaining for 7 straight days thanks to strong corporate earnings. The Nasdaq also was up, but the Dow Jones was down. What's the story in the U.S. market?
Right. Quite interestingly, there are things changing, given that if you look at the U.S. interest rate environment, 10-year government bond rate has risen to quite high. It has gone to as high as 1.7%. And usually when you have a 10-year government bond rate rising, people were quite cautious about the Nasdaq and growth stocks. But it seems that yesterday, despite the higher interest rate, we saw Dow kind of flat, while the S&P was up about 0.3%. But actually the Nasdaq was the one that rose the most by 0.6%. Main reason for that is because of the strong earnings. Quite a reasonable size of the companies been released third quarter results. And the 3Q numbers are coming in at about 82% are better than expected. And the size of the better than expected results are about 14.7%. So once again, we're surprised by these earnings numbers. And why such earnings numbers are coming through is because of the economic growth rate. Stability seems to be reasonably good. However, though, there's continuation of issue about the chip shortage. And we saw the results coming in for Intel, and the net profit numbers were coming in much better than expected, but the sales numbers were below 2% than expected. So we saw quite sharp drop, and it seems that the futures market's indicating that the Nasdaq will be taking some correction, less than 1%, around 0.4% or so. I guess we should continue to be watching out for the earnings in order to see what happens to the U.S. market in the future.
Right. So turning to Korean markets now, the Kospi closed lower today, the market remaining choppy after starting lower this morning. The Kospi closed just a little over 3,000, but it fell below that mark at one point today. The Kosdaq, on the other hand, was up. Tell us more about the domestic market.
Right. As I said, the results from the Intel, which is the largest semiconductor company in U.S., after that results, we saw quite sharp drop of the aftermarket price movement. That should have resulted into quite a strong weaknesses to Korean equity market, but it seems that it reasonably okay. We saw Kospi going down by only 0.04%, while the Kosdaq was up by 0.14%. So I guess people are watching out for what's happening to the overall individual sectors. Korea, as you know, semiconductor industry amounts to about 40% of the overall market capitalizations, and that's the reason why we were concerned about the Intel price decline in the aftermarket. But it seems that it's quite resilient in a sense because given the fact that Kospi itself didn't do much since the beginning of the year because of semiconductor industry, share prices didn't go up that much. While if you look at the U.S. market, we saw semiconductor-related sectors were risen quite nicely. So the continued concern about the memory chip side had been already taken into the account. So therefore, the market seems to be fairly reasonable. We should wait and see what happens to the foreign investors. So far, foreign investors are not really coming back to the market yet. It is the institutional investors who are supporting the market right now, and the retail investors are net seller of the market.
Sure. And South Korea's producer price index hit a record high in September, rising for the 11th month in a row. The central bank says it's because of higher prices of industrial goods like oil, raw materials, and chemical products. Tell us more about that.
Right. If you look at the September producers' inflation, it's highest since 2011. I think that's happening for most of the countries right now. PPI in South Korea advanced 7.5% year-on-year in September, quickening from upward revised 7.4% rise in the previous month. So continuation of above 7% numbers. This is highest rate since May of 2011, driven by the prices of manufactured products, electric powers, gas and water and waste, and service side. On a monthly basis, producer prices went up by about 0.2%, which is 11th consecutive monthly rise because of higher cost of the energies, and including coal and oil products. All in all, this is negative news for the operating profit margin for Kospi or Korean companies. But because of the price transferable, given the fact that the consumer price is also rising and the consumer's wage growth is reasonably strong, we don't think the margin pressure would be that significant. All in all, definitely the cost is rising. That affects negatively for the inflationary pressure. We do think that the inflation numbers should be higher than what we saw in the previous decade. All being said, that we think that the earnings for the company are not going to fall that quickly. It should be a reasonably gradual process rather than an aggressive process in the future.
All right, that was Mr. Daniel Yu, Global Strategist at Yuanta Securities. Thank you for your insights.
Thank you.